Morning, afternoon, evening everybody. Please say hi in the chat box so that we know that we're not talking to ourselves and you can hear us. Hi Samir from Auckland. Hilton, what is the panel's view on the possible Euro-Yen short at the moment? We'll come on to that. Jasvir, hi Jasvir. I'm not sure if you're the Jasvir in New Zealand. Put my teeth in New Zealand. The format for this session, as ever, is that I will go through my charts and show you what we're looking at and things and strategies. If you have any questions, please put them in the chat box, and either I or other mentors will go through it whilst we're doing the presentation, or we'll have a big Q&A session at the end. And this morning we have Judith Waker with us. Judith was a member from Mentorpro, I think back to 2010. She then joined Forex Trading Academy, where she mastered the art of fundamental analysis. And as you know, she now posts in the blog a couple of times a week, showing her theory into practice. So she shows you how to use fundamental analysis combined with technical to make trades. Good morning, Judith.
Good morning, everyone, from a misty, wet, miserable Dorset.
Well, it's England. Man, having said that, it's thrown it down in Canary Islands last few days, which is very unusual. And we have Pierre with us in his hammock in South Africa. Good morning, Pierre.
Good morning, everyone.
Good morning, everybody. Richie Benno for the cricket. Righty-ho, I'll mute you two because there's the sound of the waves crashing behind Pierre, I think, and they will be with us in a little while. So those of you, any questions that you would like to ask Judith or Pierre, then make a note of them now, and they will try to answer them as we go along. And Sean says, good morning all. Okay, there's a question for Pierre, if you have a look in the chat box, Pierre. Righty-ho, so questions in the chat box, and we'll just go through some trades from this week. This was my trade plan analysis from Sunday, and I showed you how, and I've done this before, but just to clarify, and we've got a lot of questions, how I grade trades. I am very lazy when it comes to trading. I do not sit there all day doing it. Did that 10, 12 years ago, 14 years ago. It bores me. I don't get the kick out of it. And in actual fact, when you get to the point that you don't get a kick out of trading, you actually and usually will make more money because you're not emotionally involved anymore. But what I was explaining is I do my analysis on the weekend. I look at the fundamentals. So for example, at the moment, mainly dollar strength is what we're focusing on, and pound weakness, etc. And then I grade the trade. So an A-grade trade for me is one that I will place at the market open. And it's because I feel sufficiently confident that it ticks all the boxes. Fundamentally, it agrees with what's going on, and technically, it also agrees with what's going on. And when we look for a trade for an entry, an exit, a target, and a stop, we are always looking for multiple reasons. So for example here, I was looking on the euro pound, and I said I have placed a forward order to long at 87.60. It's a pullback. And I also explained that when you're doing this kind of strategy, even though you're trading from weekly charts, you do have to be aware of the news. And Tuesday we had the big speeches with Draghi and Carney, and therefore at that point I paused it and then restarted it after the event. So an A-grade trade is one that I am looking at as the forward order. I have sufficient reasons to want to take the trade. And we'll go on to some charts now. And those of you who've been with us for a while know that I have waited for this for months. And this is the Aussie dollar yen. It is clearly in a very big down channel that has been going for well over a year. And the A-grade trades here was quite simply when every time it came up to the upper area, I was looking to short and I was looking to long at the bottom. And though it may not look it here, this channel I believe is 1300 pips. So here I'm risking around 100 for a potential reward 12 times my risk. And last year, this was the trade of the year. This was a trade that in Mentorpro we'd shown in advance. I showed you why I was going to take it. This move here, when you fibbed it, this was 61.8. And I'll show you in a moment with the EMAs as well. But we had an intersection of a weekly trend line that at that point was already established for 7 or 8 months. We had the intersection of Fibonacci 61.8, and we also had a bunch of EMAs there. So that trade there, which went 1400 pips, would make probably more than a lot of retail traders will make in a whole year. Now I trade off weekly, When you trade off weekly, then you often will have periods of frustration where you don't get a trade. But as long as by the end of the month you've made the profit, then that is not important. But it is a shift in mindset. What we do here at Mentorpro, Pierre, for example, trades predominantly off a 4-hour chart. So during the week, if you want to trade shorter time frames, then you can do so. I don't recommend going any lower, other than if you're looking for a better entry, as he does. But this then is a very simplistic pattern. This pattern repeats all the time on lots of pairs, so it's not just selecting one. And as I say, those of you who've been with us, who were with us last year, knew about this one. Previously, this had done it as well. I believe this was 50% fib, intersecting with previous support and resistance trend line and EMAs as well. Going on to a chart with all my stuff on now. Some of you will freak out with this if you're not familiar, because I've got a lot of EMAs and indicators on here. And I've also got on here a copy of Fotis's risk management tool that you can download free, and I'll put the link in later to show you how to do it. And the principle is, this is the same pair with lots of EMAs and indicators. This here was that trade of the year I was explaining about. See how we had the intersection of 55, 200 EMA, trend line, and we had Fibonacci here, and we also had this Fibonacci here as well with a bunch of EMAs. Now at the moment, of course, there's no guarantee this is going to win, but at the moment I think it's 20, 30 pips in profit. I've placed my stop just above a recent high and a Fibonacci and a psychological level, and fingers crossed it's going to work. If it doesn't, then I've had numerous trades in the past that have worked. But the advantage of this trade is I am looking at a potential reward versus the risk of around 15. You can see here the risk management tool, I've only gone to 10, but at the moment, this morning it was equal at 1-to-1, but here this has the potential, and technically this has the potential to fall a long way because there's nothing technically stopping it. The first port of call, first area to take profit will be down here around 76. It's a whole number, it's previous support and resistance, and at that point I will have made 5 times my risk should this trade go in my direction. If it comes all the way down here, then again we could be on to catch a big one. So that is an example of one of the trades. Now, as explaining, it is not a rare event, this kind of pattern. And this, for example, is the USD Singapore dollar. And the USD Singapore dollar, this channel last year, and 2014, was 800 pips. And so each time you came down to this bottom area, you were risking, for example, this was another classic tale. You'd got a stop of around 50 pips the other side of a major EMA, behind a whole number, behind previous horizontal support and resistance, and the intersection of a weekly trend line. And this was risking 50, 60 pips to go 800. It actually went 1200. It then came back down here. Now, again, you can counter trend trade. If you counter trend trade, I usually half the risk because the probability is the trend will continue. Here, at this point, you have a loss. So if you've had a couple of trades making potentially 800-900 and you've just lost 30 or 40, you are still well in front. And the biggest mistake I see is that people, retail traders, spend far too much time concentrating on how many trades win. And I know in my past early days, I would close trades near the end of a week because my win ratio was 60-70%. It's not as important as how much you win on a trade. Now this USD Singapore dollar then moved into a channel moving down, and then it got very messy. Now in recent weeks we had a breakout, and when we had this breakout here, I was looking for a pullback as ever with my method, but I explained that I was a little bit wary because this 55 EMA on a weekly was very strong, and you can see this took a month for this to break. Then it broke, and then the flipping thing went and carried on. Now I have shown you, and I showed you in Sunday's post as well, how to deal with this. My trading partner Fotis will often take trades off the actual point of the break of an area. And this was the original area. I need to cancel this order on this demo here. But this was a break of a recent high, and Fotis will get in here. He will get in at the break of the high again. So for him, then he's got potentially 200 pips in. Now I was waiting for a pullback because that is my preferred method. That is part and parcel of trading longer time frames. You can wait for things for ages and then you miss the damn thing. When you do catch one, the philosophy is you're going to catch a big one. So now with this one I was showing on Sunday, because this has now moved up and made another high and it's now stuck in a sideways range, I am interested now to long at 138.50 area, but this is not a forward order for me. The difficulty for me with this one is where to place the stop. All the EMAs are further down, the important fibs are further down. It's not as tempting for me to place a forward order, but I do watch this on a 4-hour chart, and if it comes down and we get a reversal candle or some kind of rejection here, then I will be interested to long this pair. Similarly, this is the euro pound, and again I showed on Sunday how I was placing a forward order here. Probably need to move this up a little bit more now because the trend line has moved up, but this was a major break, and again Fotis will have caught this one. I didn't on this occasion. Clearly at the moment that's not worked in my favor, but over time I find I prefer my method. But here we made the break. So we made the break, then we had this major move. This was that crazy day on the pound, and then it started to drift back down again. And this area here, you have confluence, you have recent resistance level here which became support, you have Fibonacci again in your favor, 50%, you have the intersection of the daily trend line, and you've got this EMA creeping up behind it. Same pair. Right, this is the same pair on a weekly chart, and those of you who have been in Mentorpro with us for years will recognize this. This was a channel on this pair that was 400 pips back in 2011 and 2012, and again you were placing A grade trades above and below these areas. Finally you get a break, then it got a bit messy, but 6 months later we're back into another trend. And this particular trend we made, I think it was 11 or 12 out of 13 winning, out of 12 or 13 trades taken on this, 11 or 12 were winners. We then got a loss here, and Judith and Robbie then actually had something like that. At one point they were up 500 pips on this move. So we, having got a breakout, we then look for the pullback, and then we look for a different pattern. Then we had a pause of a few months, and then you're back into a channel. So these patterns do recur all the time in trading, and it may be that one area is not trending that another could be, but it would depend on your mentality. And sometimes if you only traded off weekly charts, you might find yourself for weeks not having a trade, and that's where the benefit, something like Pierre's system, comes in. You can then go down to smaller time frames. Now on Sunday as well I showed you this is the USD yen, and I explained on Sunday in the blog post how this was in a triangle, and this triangle is approximately 160 pips deep, and the theory goes that the move after a breakout will be reflected. So 160 pips up will take you up conveniently to that recent major monthly 200 EMA, where if it's going to stop and bounce anywhere initially, that will be the area. Now this for me is a good trade, because this for me was a breakout followed by the pullback and a continuation. And the reason why I like it is that I need a smaller stop, so I could be really conservative down here, or I could even be more aggressive and down here. By taking it as a break, you usually need a bigger stop. But that one is a classic example at this moment in time of a triangle breakout. And one of the members, Andy, said to me he'd seen that, but he was favouring a short. Why had I not considered a short? Fundamentally there's a lot of dollar strength. We've also got a bunch of EMAs coming up behind it, which suggests it's a move up. We had a bounce down here, if you recall, from a double triple bottom around 100 area. It was just a personal bias. Had it broken out, the difficulty for me here, I would have needed it to break this 55 EMA, then pull back with a view to a short. Now at the moment this is the Bollinger Bands are showing that the price could well be beginning to dry up on this pair. So we've now got something else up here which could cause price to bounce off. Euro broke out last week, weekly break. Unfortunately the pullback wasn't big enough for me. I know some of the members in the forum caught this on the daily chart. Again, this is frustrating. For me, if it pulls back up, then I would be interested. Once again, the theory goes that the size of this triangle is around 800 pips, and therefore the theory goes this move will be reflected in an 800 pip move down here, which spookily is not far off the recent low down here. This was the break on the daily. I know some of you caught this, I didn't. I was very wary with the euro at the time. USD, showed you last week, the USD CAD. The USD CAD had clearly broken out. The thing I was pointing out to you with this pair, it can be nasty, and there have been some horrible spikes on this. That's 150 pipper, that's 150 pipper, that's 100, that's 150. So it can be a nasty pair. I explained, for me, it would be better if it pulled back. Fotis's method at the moment would be slightly in front, but again, it was tricky as to where the place to stop. Here, for example, if it comes back down here, this is on a daily chart, then I can place my stop below this bunch of EMAs, perhaps 70, 80 pips. The good thing with this pair, again, the risk-reward ratio is huge. This could be back on for a move to 140, up to a recent high going back to 2015, I believe, last year. Again, with the CAD, the other thing you need to keep your eye on is oil. Canada is a major exporter of oil. If oil prices are falling, then you expect the USD to get stronger and vice versa. The oil, again, may now be about to go in a range, but that's that one. Right, somebody mentioned earlier, somebody was asking me about the euro-yen. Let me see what he asked. What is the panel's view on the possible euro-yen short at the moment? For me, Hilton, I'm not interested at the moment. For me, this is in no man's land, but this is because I'm looking for longer time frames. The main areas for me on the euro-yen at the moment are down here and up here, because you can see since the summer we have been stuck in a sideways range. So what I'd said to members on Sunday was look for a potential bounce back up here. It's a whole number, it's previous support and resistance. Look for a bounce back up. If it broke here, then I would want a clear break and close on the daily candle followed by a pullback, and then I would be interested to short. And this is the other thing, is you need to make a choice in advance, a plan what you're going to do. If it gets up here, then I will short it. If it breaks and closes above there, then I will think about a long. So make a plan in advance. I will do this if it does that, I will do this if it does that. For me at this moment in time, it's just in the middle of nowhere, so it wouldn't suit me. However, when Pierre joins us, it may be that it's working for Pierre, or Judith may have an opinion on it as well. Pound explained in recent weeks after this major drop, especially this one 3 weeks ago, and the spike on it, I'm not touching this. It's just after such a big break, it's quite normal that it's stopped for breath, and it's not going anywhere. So you know, what's the point of going looking for trouble? So for me, I just want to leave that alone. What I was showing members on Sunday is, again, we are in a range, and Fotis shows you with the market profile chart, this is a common structure within trading, and basically you are waiting for a breakout of an area. Price is stabilized, buyers and sellers are in equilibrium, and it's going nowhere. So then you would start to think in terms of, well, what do I do next? Well, the pound at the moment, I only want to short. So I would be looking for a break below here. I may even be even more cautious and look for a break below 120 before considering. The ideal for me is a pullback all the way back up to 128. Major area, major previous support. At the moment, the pound's getting a kick in. Pound's getting a kick in, and it's all to do with sentiment. Everybody's forgetting that there will be an equally big impact in the Eurozone when the UK leaves. For example, Germany exports $100 billion worth of equipment and goods to the UK. So for all the posturing of the politicians about what they're going to do and it's going to be a hard Brexit, then in reality, equally the Eurozone are going to have to tread carefully. Britain imports more, I think it's Italian wines and French wines, French champagne than any other country, etc., etc. So behind all the posturing, the Eurozone could suffer equally to the UK, and that's if it doesn't implode in the meantime. I personally have the opinion the Eurozone will collapse, and not necessarily too far away. New Zealand dollar. New Zealand dollar in recent weeks showed you we'd broken 7,200, we got a pullback, but again, this is currently, it's in no man's land for me. I would prefer a pullback, one area here, the big area. Again, guys, this is a channel, like I've been showing you earlier. So I'm more interested at the edges. Here on a daily, if it broke 7,200 clearly, then I might consider a long. But at this moment in time, it's just not for me. There's nothing going on with it. What I did show you the other day, if you pull back to 72 and you wanted to short, the potential here would be, I would expect it to struggle down here as it did before. it's a double bottom, 70 is just below it, intersection of 55 EMA, 200, etc. So again, a lot going on here, and I'm sure if I fib that, that's going to be 78.6 fib as well. So that would be a target if you can get in. Final one's Aussie dollar. Aussie dollar for me is currently in no man's land. It's spiking, it's trying to get up, it's going nowhere. I'm interested to short at 78. If it loses, I'm interested to long it. Coming back down here, yes, you could consider a long here, but the potential reward versus the risk isn't great. This would be a better area, or here all the way down the bottom. Final one in my little run through is the Swissy. Swissy, I don't trade it anymore because of the Swiss bank debacle the other year when they bankrupted Alpara UK, severely damaged a lot of private individuals' accounts and caused FXCM to raise a 300 million loan as well. This, though, in recent weeks and months, technically, just keeps bouncing off this bottom area. So Murphy's Law, very frustrating, but that's what's going on. So that is my view of what is happening at the moment from longer time frames. Samir says, how do you recognize a false breakout? Very difficult question. What I do, Samir, that's why I wait for candles to close. It's why binary options is a scam to me, because price often, as the hour candle comes up to close, as the daily candle comes up, often price will start to break through an area and then it will print, it will retreat rapidly and then it will print below the area. So for me, there's no hard and fast way to beat a fake out. The things that are in your favor, if fundamentally the USD is expected to rise against the Swissy, if the euro is going down at the same time, if it's broken and closed above a major area. For example, here on the Swissy, this is an example. This is to the left. You have previous weekly resistance. On this occasion here in May, it came up and bounced off it. And this occasion again in July, it came back up and bounced off it. Bear in mind, guys, we're just below 100 as well. So now again, last week it closed, it tried and ever so carefully, gently broke and pierced, but then closed below. And this week so far, it has got up to the magical whole number of 1 to 1. But that is a huge area. And again, if you were looking to take a trade in its current position, 100 is huge. Yes, there is a potential this to go up to 102, 103, but it's usually you would expect it to struggle at 100. And so the issue at the moment, at 99, where the heck do you get in? Because I want to place my stop somewhere safe. So there's no risk reward here. If you remember when I showed you this first trade, the risk reward on this trade is awesome. Yes, it might lose. If it loses, then I will reconsider and I will still be biased to get in on a short. But remember, with this risk tool, you are here, you are risking around 100 for a potential gain of 1,000 or 10%, okay? And equally, it could go all the way down here, which is 15 times. And risk versus reward is key. Just prior to coming onto this webinar, I was talking to a gentleman who's been trading for 20 years professionally, and everything is about risk. Everything is about risk. And therefore, the next part of the calculation is the reward. There is no point at all risking $100 to win $100, because it's like backing horses. If you bet on a horse race, let's say you bet on 10 favourites, 7 of them will probably win, but you will lose money because the odds will be poor. So it's all about looking for things that technically have got the potential to go a long way. And it's the same with this Aussie dollar yen. If this breaks and closes above here and again above the 55 EMA, definitely wait for a daily candle to close, and more conservative entries weekly, but it has the potential then to go 500 and odd pips up to the recent high. And as you know, with the 200 EMA, price is either going to or away it, but it always returns to the mean, and therefore that will be like a magnet if once this breaks. Mark says, do you only pay attention to weekly trends, or do you take the 4-hour and daily into account? It depends, Mark. It's not a clear-cut thing. If you trade in 4-hour, the way I would deal with it, I would put the weekly lines on first, because more traders are paying attention to it and they have more strength. But if you go then down to a 4-hour chart, I can't think of an instance now, but I can remember instances on the euro pound recently and the dollar Singapore dollar where we had a situation where we were in an overall downtrend, but on the 4-hour it was going back up. So you would put the weekly lines in for as much as anything for targets or stops, etc. But yes, you can do it, but I always start at the top and work down. Starting at the bottom is not the ideal way. If you've got a trend line on a 15-minute chart, it does not have anything like as much strength as something on a weekly. And I recommend to all my students, followers, always start at the top and work down, and try to trade off longer time frames. When I started trading, I started trading 15-minute charts because I'd paid $5 for a course from an English company, and they taught you how to trade on 15-minute charts, and it was the worst thing I could have ever done. The risk reward is generally not there. The trend lines don't hold very well, and you get too emotionally involved. Whereas if you I went to 4-hour initially and then to daily. If you go to 4-hour, the advantage you only need to check the charts every 4 hours. If you go to daily, then clearly you only need to check every day. What I do, I will go down to 4 hours sometimes if I'm not sure about an entry or if there's big news come out. So I'll wait for, and again, I wait for the candle to close. I didn't show you the rest of Fotis's money management tool up here actually. What this does, and I say this is free of charge. I'll put it in the chat box in a little while so you can click the link, or I'll put it in a blog post. But what this does is it calculates the lot size for you, so it's a lot size calculator, but it's a lot more sophisticated than that. What this actually does is it will calculate the potential reward at different stages, as you've seen. It also, you can set the weekly loss limit that you're prepared to take. So I've set this at a weekly loss limit of all open trades is 3%. So if I had another 3 trades open at this point, it would reduce my lot size because to take this into account. And again, you need to think in terms of your overall exposure every week as well. A money manager will not want to lose more than a few percent in a given week, and will try desperately to stay below 5% drawdown in a month. Anything below 10% is seen to be healthy still in terms of drawdown. Anyway, that's that tool, and there's instructions now to use it and everything, and say it's free of charge, so you can grab a copy of that. Samir says, is my entry based on the weekly chart? This goes back to what I was showing you before, Samir, about A grade, B grade and C grade trades. If you read the blog post from last Sunday, I explained my criteria from this. A grade is weekly charts, multiple reasons like the Aussie dollar yen forward order. A B grade, it looks good, but I'm not as confident. So this type of potential trade I will watch on the daily candle close, or occasionally, e.g. after big news, on a 4-hour chart. Finally, C grade. C grade, it looks interesting, but I don't have enough reasons to give me confidence to place a forward order, and I will monitor it on a daily and sometimes on a 4-hour. But that's my strategy. I mean, I class myself as a lazy trader. Having said that, speaking to Pierre yesterday, I think he's as lazy as me these days. He doesn't trade Mondays or Fridays, and then now he doesn't trade much on a Thursday because he has a load of Forex mates come over for a barbecue. But again, it takes the emotion out of it. What screws most retail traders is the psychology, and it's the psychology of getting too excited and too emotionally attached to something, and being able to take a step back and just walk away and leave it. And I had a student, I don't know if he's with us today, but I had a student in Fotis Academy recently, and I said, how are you getting on? He said, the great thing, Mark, is I'm sleeping and I'm not taking my laptop to bed. And we've all been there. You know, we've all sat there and nursed trades over, and I used to dream about Forex. I mean, it's so addictive and so sad. So go out to longer time frames, at least daily is my recommendation. Mo was talking about the Brexit, the British situation. Yeah, Brexit is an uncertainty, is what's damaging the pound, and then obviously speculators are getting involved as well. The one thing markets don't like is uncertainty, and that's what's going on at the moment. And a lot of what goes on, even on a fundamental point of view, it's not data sometimes, or a lot of the times, it's sentiment. If you think back 2 years ago, 3 years ago, the dollar was falling through the floor because the US had a then 18 trillion debt mountain. The US since then have printed trillions of dollars to buy their own debt, and yet their own debt mountain is now at 20 trillion. It didn't get any better, but the sentiment has changed. The jobless figures massaged, but jobless figures are a bit better. They have some small amount of growth, which is better than Europe, and there's the thought of interest rates and inflation. So, but that dollar situation, the debt mountain didn't go away, and yet the sentiment has changed. What trades am I in now on the Aussie dollar yen? The one I showed you, Ralph, and it's in the blog on the weekend. I think it was 80.20 where I got in. Sean says, hit the nail on the head. Yep, we're sad. Hey, Sean, I did it. I did it for 3 years. I sat here for 3 years for 8-10 hours a day, and it was stupid. And I was even more stupid because I used to win in London and I used to lose in New York. And it shows how dumb I was. Instead of just focusing on London, I was determined to crack New York. But part of the problem is as well is that you sit there and you get tired. And when you get tired, you make silly mistakes. And also you force trades when you're tired. You know, you sat there 5 hours and nothing's lined up, and something starts to move, and you think, right, I'm in. And then, of course, Murphy's Law, it whips around and it takes you out. Stefan says, I wish to trade on the long term, but there are so many methods that are available. If I'm going to trade on the long term, should I use the M2 method or Earth and Sky? Stefan, the M2, Pierre's Earth and Sky system was actually, he pinched mine and took a few things off and he added a few of his own. And I've muted the microphone so he can't say anything. So there actually are a lot of similarities with it. The M2 is more about, these days, is more about if you want to trade from daily charts because you're trying to trade around a job. The Earth and Sky has been very, very successful this year. It was very successful in the summer, and that is generally going down to 4-hour charts. So really your first thing to think about is what time frame can I trade, and also the Asian session used to be very quiet. I've not even looked at the Asian session in years, but I know there's been more movement this year. But the 4-hour strategy for me used to work better in London and New York. So with you being in Brazil, it would depend on time zones, it would depend on when you can trade, and your psychology as well. Have you got the patience and discipline to wait for a trade on a long term? And as I showed you the Aussie dollar yen, I've waited months for that pullback, but in recent weeks Pierre's had a lot of decent trades on that using his system. So you know, the principle is the same. Everything realistically about trading is all about support and resistance. So whether it be trend lines, Fibonacci, EMAs, that is the basis for all technical trading. And then which method you want to use, as say the M2 and the Earth and Sky do have a lot of similarities. Mo says, I have been struggling for the last couple of months. Are you having the problem too? I've had more losses than usual of late, Mo, but because my philosophy now, and it's not my philosophy, it's somebody else told me basically, say, look, when I go fishing, I don't go fishing for mackerel or sprats, I'm going fishing for marlin. So I can afford to have more losses as long as when I catch one, I catch a big one. So again, this goes back to, it's not how many you win, it's how much. And I've told people before, I have a mate in London who's been a top trader for 10 years plus, and he wins 40-odd% of the time. But when he wins big. So it's not been easy. The summer was messier than normal for me, and yet Pierre, with his Earth and Sky and using combined with pivots, had a really good time. And again, if you can learn the both, then you've got the choice, you know, because let's say we suddenly start ranging and it's a tight range, maybe my system won't work for a few weeks, but Pierre's will. So try to learn both.
Morning, everyone. Yes, I have a little bit of a confession this morning. We all don't like change. Sometimes when you're a trader and you've got a specific system, you will trade it for many years, and then something will come along and then you'll think it's working quite well, but you don't give the attention to it that it deserves. And I'll show you this morning what I mean. Starting off quickly with the Euro JPY. Somebody asked in the forum just now, or on this web seminar, what about a short on the Euro JPY? Now, if we look at the Earth and Sky trading system, then we had to flip from the previous week, from the highs that we had, to the lows that we had. And we had a trading zone starting at 113.64 going up to 114.16. Now, my concern is price broke this 200 EMA at the 75% fib to the upside. We broke a daily 55 EMA as well, plus the weekly pivot point. So be very careful with this one. If you drop down to the 1 hour chart, and you can see that there's still a trend line in place. And I will prefer this trend line to break first before I will take a short on this one. My feeling is if we don't get a turnaround here and we don't break that trend line, the next line in the sand will definitely be this area here, which was the previous week's high area at 114.68. And this is what is making so difficult forward orders, because if you had a look at this, this is a 200 EMA, it's a 75% fib. If you look to the left of the chart, previous support resistance there as well. And if you had a forward order there, there were a couple of pips to be made here. Let's quickly have a look. And that was about 46 pips. But we broke now to the upside. So you just never know with these trades. So that's why I prefer confirmation. So that's the one part of my present. Let's quickly have a look at this chart. It's a different platform, different broker. Now, I don't know, it's probably about 6 months ago, photos came out with the RSO indicator. We all know this is the spaghetti indicator. I had it on my charts, but it takes a lot of juice, so it can slow down your platform. But over the last couple of days, or couple of weeks rather, I've been giving this more and more attention. And on Monday, in my Monday morning quickie, I said to you guys that the cat is oversold, is in an oversold area. If you look at the indicator here, it's the purple line. Look at that, the cat. That was on Monday. And then I said to you, look at this. The dollar was overbought there. And I placed a line here at 7 and a line at -7. So when we're above the 7, we overbought. If we're underneath the 7, then those pairs are oversold. So my focus immediately shifted to the dollar cat. If we look at the dollar cat, let me just quickly bring my other charts back. Where did I put that one now? It was the dollar cat. So on Monday, I said to you guys, there's a possible short coming up, and look at what price did. Because remember, the RSO indicator already told us. And look at this candle formation at the psychological level, and I actually took a short on this one. And this one had a quick drop, and we dropped about 110 pips. So that was an early warning sign for us that there was a trade coming up. Now let's get rid of that one again. Now later in the week, we can see we pulled back together again, and there was nothing on the cards. And then later on, the Aussies, look at that, above that 7 line. And if we drop down quickly to the Aussies, and this is where my pivot points are so awesome, guys. If you look at this chart here, then that doesn't really tell you a lot. All it tells you that if we look at the weeks, that is a possible resistance area. Why? Because it was the previous week's high area. But look at this now. When we hit these areas and we go to all the Aussie pairs, remember we saw that it was overbought there now, so we know that there's trades coming up. But look at this. We had a pivot point, 7659. It was the previous week's high area. Stochastic was overbought here. The RSO indicator told us that it's overbought. We go to the Aussie US dollar 4-hour chart. Look for those multiple reasons. The RSO indicator told us it's overbought. Here we were at the weekly pivot point 7697. At the psychological level at 7700, previous support resistance. Aussie New Zealand dollar. Remember all the Aussies. Here we broke the pivot point. But the RSO indicator told us that we need to look at that. Look to the left, previous support resistance. Where did price turn? At previous support resistance. Aussie JPY. Now this one was interesting because there was nothing there. There was no pivot point, no reasons there, so I would have left that alone. Aussie CAT. We broke to the upside. Remember, I always say, once we hit second pivot points, then we highly overbought or highly oversold. This case, look at the candle formation. So there was reasons to short there. MACD was high, stochastic was overbought, RSO indicator told us that all the Aussies are overbought. Euro Aussie, remember here now, the opposite, so it needs to go long. Where were we? At a weekly pivot point, 4,169, going up. That would have been your main profit take because that is the 55 EMA, and that is also now the start of the Earth and Sky trading zone. I can just get hold of my FIP. Getting into the zone there now, that's the 65.2 FIP. Aussie CHF. We had the Aussie CHF already. So can you see how this RSO indicator, although we are looking at a hell of a lot of pairs to trade, there were only three really pairs that we had to focus on. Beginning of the week, it was the US dollar against the CAD. Then everything went into no man's land. It was neutral. And then later on the week, we had to focus on the Aussies. And as I showed you now, there was a hell of a lot of trades setting up on all the Aussie pairs from those pivot points. So that is how the RSO indicator can help you taking those trades. Just quickly want to go back to my other platform. Beginning of the week, I also said to you guys, we had to look for shorts, and this is what I did. I had a forward order just above the psychological level in this area here. We had a psychological level there. We had a weekly pivot point. And what can you guys see? We had the spike, so it's unfair for me now to say we had a divergence because that came in later. But what we did have is price went sideways while MACD was trending down already. Plus the RSO indicator told me to have a look at that. So now I had a forward order there that triggered, and profit take was just above this weekly pivot point. And I think my original stop, if I can remember correctly, was about 31 or 32 pips, and I got out with a 61 pip profit. So the confession is, use that RSO indicator. You can look at a hell of a lot of pairs, but that RSO indicator will help you focus on the pairs that's really necessary for the week.
Okay, thank you very much, Pierre. I bet most of you have, having played with the RSO, put it in a box and have never bothered with it since, but that's what it was doing. It's looking at baskets of currencies, as Pierre said. And the other thing is, if you're trading purely technically, it's drawing you to the pairs that are likely to have a potential trade. I used to trade 6 pairs, but using something like this, you can trade 60 pairs because it will point out to you which ones to focus on. So well done for Pierre. The other thing is, you will find that with indicators and things, I have different biases at different times of the year. Sometimes I pay a lot of attention to Bollinger Bands, for example. Other times I don't pay any attention at all. Thank you very much to Pierre. Are you mates there for the barbecue yet? Have they arrived?
Yeah, they're sitting very quiet. I think one day I will get there because we all got different t-shirts, and I would like these guys to actually share their little stories with you guys as well. It's I get so fed up with the marketing people, Mark. They make it look so easy. The feeling out there is it's easy money. And when you meet people like this, you can see we all had. It's a long journey, so don't give up, guys. For those guys that's been trading for 2 years, still struggling, don't give up. There's light at the end of the tunnel.
Well, I think the thing is, one of my favorite quotes of all time. It was by Calvin Coolidge, which was a lesser-known American president, but he spoke about persistence. Above all else, there are lots of smart people that never make anything, lots of wasters, whatever. But he speaks. I'll dig the quote out, but it's all about persistence and not giving up. And as you say, people are drawn into this by it's easy to make money. It looks so easy in hindsight, as we all know. But the thing is, guys, you've got Pierre in the forum every day, and he's telling you in advance what he's going to do. I'm there on a weekend, or Omar telling you what we're going to do and why, and as is Judith. So, and Judith joined us originally as a member, Pierre joined as a member, Omar joined as a member, and yet they're all doing it, they're all trading. So, it's doable, so don't give up, but equally you've got to put in the time and the effort and be sensible and don't risk too much. Right, we need to go over to Judith now, otherwise we will run out of time. As ever, if you have any more questions, put them in the box. And thank you very much to Pierre. Just to prove that you have got a group of people with you and you're not just sat there on your own, can they all just cheer?
No, they're sitting in the next room, mate. I will tell them to come here before we say goodbye.
Don't leave them with your beer fridge on their own. Okay, thanks very much, Pierre. Right, we'll go over to Judith in the UK.
Yeah, hi, I want to be at Pierre's party.
He does it every week now. Can't believe it. So he doesn't do Mondays, he doesn't do Fridays, and now Thursdays he stops at 11. Right, let's make you a presenter.
Okie doke. I always feel as if I have the boring bit, but I actually find this stuff quite interesting. The screen shows my setup. Basically, I have these four windows open all the time on my computers. I have the Bloomberg. I don't read all this stuff. I read first of all, I get a sense of what is important in the news, and secondly, I read what I see as relevant to what I'm trading or what I'm looking at or what I'm thinking about, or the very biggest of the pictures, which is basically central banks. There is a little bit here. I haven't read that yet this morning. Anyway, so that gives me a good start to the day. I have Zero Hedge Breaking News, which is a great site. I don't even pay the money for this site. I use the free one. It's about 5 minutes behind everybody else, but because I'm like Mark, I trade further out time frames. It doesn't bother me, but I'm on this site all day long, and this one has a really nice feature because it has what they call the EU morning call. There's the nation one as well, and that just summarizes everything that you need to know and puts you in the right place for the day, and tells you what to watch on this thing, which is the Forex calendar, which I'm sure is familiar to everybody. Interestingly, just to draw your attention to something that happened after I published the blog, UK GDP came out strong. Well, I say strong, it beat the estimate, but 0.5 is nothing to get too excited about. Just a word on the UK, Robbie and I don't trade the GBP because it's just way too hairy at the moment and we don't like it. But if you are trading it, your bias is probably short, as ours is and would be if we were trading it. And that means something like this is going to be an indicator of a pullback, and that's what I use the news for. I don't sit here and trade the news per se. I just look at what it does to direction and whether it's going to give me an opportunity in a setup that I'm already got on my screen. The next thing I use is this one, stockcharts.com. They're also free and they're brilliant. There's three real big ones that I watch all the time. That's TNX, which is the I'll put this all in the blog, but you will see them in the blog from time to time. TNX is the US Treasury 10-year yield, which we watch. CRB is up on my screen because I'm in a live trade on the New Zealand USD, a short, so this is nice. And then the Bloomberg background chart, as you've already seen. So that's that. And then I open up these, and this is my set. From this, I do use a particular setup, which I'll show in a moment. As far as news this week, yes, Mark mentioned about central banks. It's what we're watching all the time. Carney, it was really interesting this week. We had Carney talking about his little kind of his session, shall we say, with the government. Draghi's got the same thing with Schauble. They're all saying you shouldn't be doing this. QE's bad. Well, QE might be bad and it might not be working, but the truth is we're now in a globalized economy, and what is interesting to me is the politicians are directing everybody's attention to the domestic front, which is their job, but yeah, the central banks have to be independent because they have to think in a different way, and all the central banks are on the dovish side and are still trying to refire their economies. So that's a continuing battle. The upshot of all that is that everyone except the US is on the dovish side, and Draghi and Carney both defended their easing positions, if you will. So we can look to more of that. I think I update that every week because there are little changes, but that's the generalization. With the US, Mark said about the economy, he's right, it's not strong, it's not brilliant, but it's a comparative strength. It is better than everything else. So we're looking towards a December rate rise, not a November one. Obviously, if they do that, it will be a huge shock to the market. So we have to be alert to it, but it's very unlikely because of the US election, which takes place the following week. So just on one point, if you're following the that's my equities chart. We'll talk about that in a minute if we have time. Mark, stop me if I overrun. We don't want any crashed sites. USD index is, I put this on a weekly. Again, like Mark, I use loads of weekly charts and you'll see loads of them in the blog. But this approaches weekly overhead resistance, and it's quite a firm little channel. So the question is, what is going to take the US index through that? We think that the US index is stronger than everything else, but it's got to get through this resistance. We have the election to get out of the way, although we think we know the result. We're fairly sure now. But stranger things have happened. On the subject of equities, I know I'm rattling through this, but I'm aware of the shortage of time. These are on Robbie and I's short list. They're all looking remarkably similar. They're all consolidating. They're all precarious. Our favourite, and only because we've watched it the longest, is the S&P 500, and 2100 is the magic level for us to watch, so breaks of that. I think I'm fairly sure I've put a weekly version of that in the blog this week, so you can take a look at that. Little note on oil. This is a big subject at the moment. OPEC. We've got pre-discussions this week, which always cause a few waves. We have people like the Russians coming forward saying, "Oh, they want to help, and they're going to join in the agreement." And yeah, we've seen it all before. My bias is towards no agreement, even if we get one. People forget that OPEC is actually a voluntary organisation. There is no enforceability. I have gone on about that in the blog, but that's the truth. So the other thing to remember is that with oil, I'll bring the oil chart up, this is always here, is that once we get above 50, and you can see how it fights around 50, once we get above 50, then production is ramped everywhere. So we're back to the supply side problem, and that fixes it around that level. So yes, it's likely to stay in that range, or to fall if we have a problem with the OPEC and the whole thing comes unstitched, and it could seriously cause a significant fall. That brings me on to the CAD. I haven't got to the trade we're in yet, but let me come to the CAD because I want to show you the setup that this is what I use. It's not what Robbie uses, so we combine the two. It'll take just a moment, because this is British Telecom here we're waiting for, and it's not responding. That's great, isn't it? There it is. Okay, so I have the market profile, which we use on Photos Trading Academy. I have MACDs and EMAs, and then I have pivots on everything. Thank you, Pierre, for pivots. I love them. And I combine all these, and then I combine also with what Rob is using, which is a lot of Pierre's indicators and the more traditional stuff, technical stuff. And then when we have something that comes together, we think, hey, this is great because we're both seeing the same things, and then we run with it because it's good for us. That's how it works. Okay, so USD CAD actually. Mark mentioned this, and I'll only say this briefly. It is volatile, it is choppy. We've got OPEC, we've got Canadian data, it's not very good. We've got USD elections. There's everything in the pot here. Can be very volatile, very choppy, but as Mark said, it's got a huge risk reward, so we can afford a big stop, and we are looking seriously at a long. I've put the details of that in the blog. The last thing I'm going to talk about is the New Zealand dollar, because that's our live trade. Yes, it has gone a lot underneath it to stop it. However, there was on the daily chart a lovely head and shoulders arrangement. Lots of other reasons we got into this trade. But if it does it, the the target could be down here. We've discussed this. Robin, I would probably take profits at the 200 EMA, which would be just a 1 to 2, and that in this climate is good enough for the books. So that's that. Anything else to say? No, I think I've covered the bases, Mark. I hope that's
great. Thank you. Right, next week we'll let you come on a little earlier, and then you're not having to rush through it.
did race a bit. Sorry.
No. For some new people, looking at all the different things Judith's looking at, you might blow your mind and think, wow, I'll not get this. You can do this as simply or as complex as you want. As I showed you earlier, I have a chart set up that just has candlesticks on. I have 3-4 different setups. I have the market profile, I have the candlesticks, I have my own system. So you can be as complex or not as you wish, depends on your system. But what Judith is doing is looking at what's happening everywhere around the world financially. Again, she's not placing many trades, but when she catches one, she catches a big one. And she when she joined Fotis Academy, was averaging 30 pips a trade, and she's had lots of trades that made over 300 since then. So the proof is in the pudding. Mark Percy says, if the Aussie dollar yen hits that level again, would you still trade it? Yeah, I don't want to get out of that, Mark. So even if it breaks a bit higher, I would still want to short it. Jazvir says, fundamentals suggest that USD yen will not go above 105. So can you tell me why you take long on it, or is it short-term trade? It was a triangle breakout as much as anything else, Jazvir. So it was, you know, there is what's known as a harmonic wave pattern where price will meander between areas, and that upper 200 I showed you seems to me like a reasonable target. Sean was asking a question for Pierre. Pierre, we've lost connection with Pierre. I'll ask him to answer in the blog, Pierre, Sean, and if not, we can always ask him again.
Can I comment on the yen as well, Mark? Yep. On the question on the USD yen. Fundamentally, it supports a move higher. If we look out for the Bank of Japan next month, if they get dovish, then we might see a little push, and that might be enough to take it onwards and upwards.
And Sean was asking about the Earth and Sky system, what is the edge, and waiting for solid support or resistance. I think we've probably answered the question about solid support and resistance, Sean, because I was showing you about these weekly trend lines and how to use, you know, to start at the top and work your way down. So hopefully I think we've answered that one. But if you ask the question in the forum, Pierre will endeavour to answer it there, and if not, if you make sure next week to ask the question, we'll make sure that that's the first one that we cover. The reason we have to go is after about an hour, my internet here in the third world is not great, and things tend to crash, and then we lose the recording. For guests who were with us this morning, I hope you enjoyed the session. Some of it was very simplistic, some of it looked rather complicated. As I said earlier, you can make this as easy or as complicated as you wish. What I do know from my own personal experience and from teaching other people for 8 years online now is that adding fundamentals certainly improves the ability to stay in a trade longer, and can also help you reduce the amount of losers. But as we said earlier, the moral of all of this is you need to stay in longer and to squeeze as much profit out as you can. Okay, thank you very much for attending today. I hope you enjoyed it. I hope you learned something from it. A recording will be placed in the blog later today, and later in the week there will be a copy added to the live training session section in the education area. If anybody has any other questions, please put them in the forum. If anybody non-member wants to talk to me, then email me contact@forexmentorpro.com. Okay, thanks for your time. Thanks 30. Thank you, Farah. It says thank you very much, as does Sean and Philip and Stephen, Stefan, Samir, etc., etc. Okay, guys, thank you all very much. Thank you to Pierre and Judith, and have a good weekend. We'll catch you all. Well, Pierre will be back with you for his roundup tomorrow, and we'll be back with you on Sunday for our analysis for next week. Thank you very much. Goodbye.